Wealth transfer refers to the process of passing down wealth from one generation to the next. This can be achieved through inheritance, gifts, trusts, and other financial instruments. Wealth transfer is an important part of estate planning and can help ensure that a family's wealth is preserved and grows over time. The year 2023 marks a significant shift in the demographics of the population, with baby boomers entering retirement age and passing down their wealth to their children and grandchildren. This presents a unique opportunity for families to transfer their wealth in a way that is both tax efficient and aligned with their values and goals. At the same time, the challenges posed by changes in tax laws, complex financial instruments, and shifting economic conditions make wealth transfer in 2023 particularly important. The wealth transfer landscape in 2023 presents a number of challenges, including differences in values and goals between generations, the impact of estate and inheritance taxes, and the complexities of financial instruments and regulations. At the same time, there are also opportunities to develop strong family relationships, diversify investments, and create comprehensive wealth transfer plans that will ensure the long-term preservation and growth of a family's wealth. Wealth transfer in 2023 requires careful planning and a deep understanding of the challenges and opportunities. With the right approach, families can successfully transfer their wealth from one generation to the next, preserving and growing their wealth for future generations. Overview of the current economic conditions. The current economic conditions in 2023 are characterized by a number of factors that are likely to have a significant impact on wealth transfer. The global economy has been recovering from the impacts of the COVID-19 pandemic, which has led to a number of changes in the financial landscape, including lower interest rates and increased volatility in stock markets. At the same time, rising inflation and a growing national debt are also likely to have an impact on wealth transfer. Demographic shifts and their impact on wealth transfer. One of the most significant demographic shifts in 2023 is the aging of the baby boomer generation. As this generation reaches retirement age and begins to transfer their wealth to their children and grandchildren, there is an increased need for careful planning and a deep understanding of the challenges and opportunities in wealth transfer. This demographic shift also highlights the importance of intergenerational communication and the need for families to work together to ensure that their wealth is transferred in a way that is tax efficient and aligned with their values and goals. Technological advancements and their impact on wealth transfer. Technological advancements are also having a significant impact on wealth transfer in 2023. The rise of digital assets, such as cryptocurrencies, has created new opportunities for wealth transfer, but also presents new challenges in terms of valuation and regulation. Additionally, advances in financial technology have made it easier for families to access and manage their wealth, but also increase the risk of cyber attacks and other types of financial fraud. Understanding the impact of technological advancements on wealth transfer is therefore critical for families seeking to transfer their wealth in 2023. Key challenges in wealth transfer 2023. Differences in values and goals. One of the biggest challenges in wealth transfer is the differences in values and goals that often exist between generations. For example, older generations may place a higher value on preserving wealth for future generations, while younger generations may be more focused on using wealth for immediate financial goals, such as buying a home or starting a business. Addressing these differences in values and goals is essential for ensuring a successful wealth transfer. Lack of communication and trust. Another major challenge in wealth transfer is the lack of communication and trust between generations. This can be due to a variety of factors, including differences in values and goals, a lack of understanding of the wealth transfer process, or a lack of transparency in the management of wealth. To overcome these challenges, families need to establish open lines of communication, build trust, and work together to create a comprehensive wealth transfer plan. Overview of the current tax laws. Estate and inheritance taxes are a major challenge in wealth transfer, as they can significantly reduce the amount of wealth that is passed down from one generation to the next. The current tax laws in 2023 are complex and constantly changing, making it difficult for families to understand the tax implications of their wealth transfer plans. Overview of complex financial products. The financial landscape in 2023 is characterized by a wide range of complex financial products, including stocks, bonds, real estate, and alternative investments such as hedge funds and private equity. Navigating these complex financial products can be difficult, and it is important for families to have a deep understanding of the risks and rewards associated with each. Navigating regulations and compliance. In addition to the complexities of financial products, wealth transfer is also subject to a number of regulations and compliance requirements, including securities laws, tax laws, and anti-money laundering regulations. These regulations can be difficult to understand and navigate, and it is important for families to work with a qualified financial advisor to ensure that their wealth transfer plans are in compliance. Strategies for Successful Wealth Transfer 2023. Understanding the family's goals and values. The first step in creating a successful wealth transfer plan is to understand the family's goals and values. This involves conducting a thorough analysis of the family's financial situation, including their assets, liabilities, and income streams, as well as their priorities for the future. This information can then be used to create a comprehensive wealth transfer plan that aligns with the family's goals and values. Creating a roadmap for transfer of wealth. Once the family's goals and values have been established, the next step is to create a roadmap for the transfer of wealth. This may involve creating a timeline for the transfer of assets, determining the best methods for transferring wealth, and developing a strategy for managing tax liabilities. A comprehensive wealth transfer plan should also consider the family's long-term goals and should be updated regularly to ensure that it remains relevant and effective. Improving communication and trust. Building strong family relationships is critical to the success of a wealth transfer plan. This involves improving communication and trust between generations and ensuring that all family members are involved in the wealth transfer process. This can be achieved by establishing regular family meetings, encouraging open and honest discussions, and providing opportunities for family members to work together on financial and investment decisions. Encouraging intergenerational collaboration. In addition to improving communication and trust, it is also important to encourage intergenerational collaboration. This may involving multiple generations in the wealth transfer planning process, providing opportunities for family members to work together on investment decisions, and encouraging family members to share their expertise and knowledge. By working together, families can create a more cohesive and effective wealth transfer plan. Minimizing risk. Diversifying the investment portfolio is a critical component of a successful wealth transfer plan. This involves spreading investments across a range of asset classes and geographies in order to minimize risk and ensure that the portfolio is well positioned to weather market fluctuations. A well-diversified portfolio can also help to maximize growth potential by taking advantage of investment opportunities across a range of asset classes. Maximizing growth potential. In addition to minimizing risk, diversifying the investment portfolio can also help to maximize growth potential. This may involve investing in a mix of stocks, bonds, real estate, and alternative investments, and taking advantage of opportunities to invest in fast-growing economies and industries. By taking a long-term perspective and diversifying the investment portfolio, families can maximize the potential for wealth growth and ensure the success of their wealth transfer plan. Importance of professional advisors in wealth transfer. Professional advisors play a critical role in helping families navigate the complex landscape of wealth transfer. They can provide expertise on tax laws, investment strategies, and estate planning, and can help families develop a comprehensive wealth transfer plan that aligns with their goals and values. Professional advisors can also help families build strong relationships, manage risk, and maximize growth potential, ensuring that their wealth is successfully transferred from one generation to the next. Wealth transfer in 2023 is a complex and challenging process that requires careful planning and execution. Families must understand the wealth transfer landscape, including the current economic conditions and demographic shifts, as well as the impact of technological advancements. They must also be aware of the key challenges, including intergenerational differences, estate and inheritance taxes, and complex financial instruments and regulations. By taking these factors into consideration and working with professional advisors, families can ensure that their wealth is successfully transferred from one generation to the next and that their long-term financial goals are achieved.